Is the market going to reverse going into next week? We can't possibly maintain this pace on the upside, can we? These are all questions that I hear on a daily basis right now. They came up frequently this past week as markets were making new all-time highs. The key to remember is price action is king. We can all come in and form opinions on what we think the market should be doing, or we can go to CNBC, Fox Business, Bloomberg, to go to all the so-called experts and see what they have to say. But the bottom line is the market will tell us everything we need to know, as long as we know what to look for. I'm going to walk you through some technicals and some key numbers that I look for on a weekly basis to gauge how strong or weak the market is, how strong the trend is, and could we potentially be in for a further push on the directional side or a reversal in the other direction. All right, so if I go to CNBC, right, let's just quickly go over to their site. And if we were to scroll down here, my bet is if we scroll down through enough of these headlines, we're going to see a mix of bullish and bearish headlines. In many cases, you're going to see them trying to push the fear narrative, right? Because that's what everybody's looking for. And the bottom line is it's hard to come away with a clear takeaway. It's hard to know, what to do Monday morning when the market's open again. It's hard to have an opinion based on facts and based off of numbers. What I like to do instead is block all the noise out. I don't pay attention to financial media. I don't come to CNBC, to Fox Business, to Bloomberg, because even though I love markets, I love everything about the world of finance, I don't want to be distracted by the headlines. I want to focus in on what's most important, and that is price action. That's the technicals on the chart. It's our opinion that when we get over to the charts here, what I'm looking at here on the chart is going to tell me everything that I need to know about what the market thinks about the news. Markets and traders will interpret the news faster than we on the retail side can come in and read the headlines, read the articles, form an opinion, and then take action on that opinion. We can focus on price instead and know it doesn't matter what the headlines are. It matters what the market thinks of those headlines, right? I always start out every day. I look at this chart right here every day, multiple times a day. This is simply the daily chart of the S&P 500 ETF, or symbol SPY. And if we take a look, I've got just a few basic moving averages on here, a mix of simple and exponential moving averages, nothing complex here. I'm simply looking for, is there a clear trend in place? How far have we gone? And then when I take a look at those daily candles, there's a lot of very useful information that I can glean from this chart. If I take a look, if we go back to this move on the upside, take a look at how these candles are constructed. On this way to the upside, see how a lot of these green candles, these candles are closing right up at the high of the candle? That's indicating there's a lot of buying pressure, especially late in the day. And when you start to see closes up near the highs of the session, that's indicating traders are willing to hold positions overnight. They've got a strong conviction about a directional move continuing. That's a sign of a very healthy market. So we saw a lot of that on the initial phase to the upside, the middle part of the upside, and then even towards the tail end of that move to the upside so far. We were seeing a lot of strength where we're getting closes near the highs of the session. Now let's take a look at the past week. Right, let's go back over the past 4 or 5 trading days. Look what's changed in these daily candles. It's not just enough to look at this chart and say, hey, there's a clear upturn in place. I want to take a look at those daily candles to see, is there additional information that can help guide my decision making in the days and weeks ahead? Well, look at what's happened over the past handful of trading days. Look how the candles have changed. Now all of a sudden we're seeing more wicks pop up. We're seeing smaller bodied candles and you're seeing more wicks. When you start to see wickiness like that, that's indicating more indecision. You're not getting that strong buying into the close like we saw the prior few weeks. Now people are saying, you know what? I don't know if I want to hold positions overnight. Markets are extended. We might be in for a pause. We might be in for a pullback. So let's close out of any type of a day trade or any type of a short position. Let's go ahead and close those out before the end of the day. Right? So now you start to see the wicks pop up. That's, again, a sign of more indecision. It's very typical of a late stage move. Now, that alone does not mean a reversal is imminent. It's just one clue. It's just one warning signal. Could this market continue to push higher in the days ahead, up to more all-time highs? Sure. But when I start to see more wicks pop up, and then look at Friday's close. Friday we got up, we established a new all-time high. And then we saw that afternoon reversal. And then we get this close. Take a look at the close on Friday. We close right down near the lows of the session, less than 20 cents off of the low of the session. Right now you're taking a look at traders not willing to hold bullish positions overnight, not willing to hold those positions into the weekend. Now you get some profit taking. Again, another sign or another warning signal that we could potentially be in for a short-term reversal. Doesn't mean the top is in indefinitely, doesn't mean we're in for a huge crash, but we could potentially see the start of a nice healthy pullback going into next week. Now, for that to happen, there's a couple things that I'd want to see play out. In order for me to see, more follow through on the downside, get more excited about a move to the downside, I want to see a close below my purple line here. That is the 8-period exponential moving average. And look what's happened over the past week and a half, 2 weeks. We have tested that level 3 or 4 times, and every time that we've tested it, the bulls have stepped in to defend that level. And we've seen that springboard move back up to the highs. If we're going to get some selling early next week, at a minimum, we've got to see that 8-period EMA broken. And we went into the weekend with that level at 713.18. Come Monday morning, that level will continue to move higher. I'm just going to continue to track it. If we can get a close below that level, there's most likely stops hidden below that level, sitting right there, and we could potentially see a little bit of profit taking, and that could potentially lead to a further move to the downside, down towards this big 700 level. Not only is that a big round number, a big psychological level, but we've also got the 20-period SMA and EMA. Those are the green lines on my chart. We've also got those sitting right there. That could potentially be a near-term target for a pullback. My expectation is if we get down to those levels, we'd most likely see the bull step in and potentially bounce us off of those levels, and that could lead to another wave on the upside that we'd be looking to play. Right? Look at the volume down at the bottom. Again, on the initial stage to the upside, we are getting some decent volume behind the move. But as that move continued to the upside, look what's happened on the volume side. We went from, getting 80 to 100 million shares traded on a daily basis to now the past week, outside of Thursday's session, it was a struggle to hit 45 or 50 million shares. The volume was very, very light. There was not a lot of conviction on that latest move to the upside. Again, another sign that markets are potentially tired, potentially due for a pullback in the near term. If we see that volume pick up on any type of selling next week, that potentially gives us more staying power, potentially gives us more follow through on the downside. The average true range, the ATR, it's that red line down at the bottom. The ATR, we saw it close below 8 here on Friday. The average true range, as active traders, I want active range. I want that range between 6 and 8. We still have it, but the range has contracted in a big way over the past few weeks. Again, there's not a lot of big movement intraday. You're not getting a lot of back and forth movement because there's a lot of wait and see at this point. Everybody that wants to be bullish is already bullish. People that want to put capital to work, they're saying, hey, I want to see a pullback first. I want to get bullish from better prices. And if you're bearish, you want to see some of these support levels broken, right? So now you've got this whole big group of people are just in a wait and see mode. If we can break some of these support levels, now all of a sudden the volume starts to kick back in. You start to see much better trading conditions. That's why going into next week, I would love to see some of these warning signals trigger into a 3, 4, 5-day sell-off. That would help reset things, give us a pullback to the downside that we could participate in, and then potentially open things back up to better bullish action from lower prices. Right? Now let's take a look at the internals here. Let's go to Friday's session specifically. If I take a look at Friday's session, this is the volume ratio. We had very strong volume in the NASDAQ. As far as the overall volume number was light, but what volume we did have, there was a 2-to-1 ratio of up volume versus down volume. The NASDAQ was doing the heavy lifting, right? The volume ratio on the NYSE was slightly negative. That's another warning signal again there that when we start to take a look that then all the volume was in one area. Now you're starting to see that you don't have the broad-based participation. You don't have, every sector, every area of the market participating, right? You've got volume in one area. Again, just another sign of a tired market where just a few core names are doing a lot of the heavy lifting. All right. Now you can see that clear over on the advanced decline line, because that simply just takes a look at how many names are moving to the upside and the downside. And if we take a look here on Friday, there was pretty healthy participation inside of the NASDAQ. We had a plus 1200 advanced decline, indicating that there was more names in the NASDAQ moving higher than lower on the session. So yes, the strength was in tech. It's been that way for months, but when you take a look inside of tech, it was Apple doing the heavy lifting. It was not broad-based across every name. NVIDIA was lower, right? So now when we start to take a look at that, and we go from taking a look at this daily chart, now we go into volume, we take a look at the range, we take a look at the internals. Now it's giving me a pretty clear picture of what to expect. Now, I'm explaining this in detail, but this can all be done in just a few minutes on a daily basis. This gives me much more tradable information than trying to interpret what CNBC is saying or what Fox Business or Bloomberg is saying. Now I'm putting some data, I'm putting some numbers behind what we're seeing. If we go over to the NYSE or the New York Stock Exchange, take a look here. There was actually more names moving to the downside than the upside. We finished with a minus 73 on the advanced decline. Again, another sign. Strength was in big tech, not all of big tech, just a couple of names at the top. Apple was doing a lot of the heavy lifting on Friday. But when you start to dive in and take a look, there was some weakness under the hood. Right? You're definitely starting to see more names pull back. And when you start to see that leadership narrow like this, how long can Apple prop things up? How long can big tech continue to prop the entire market up? They've done a phenomenal job so far. Can it continue? Time will tell. But in the near term, we're definitely seeing more signs of tired conditions. All right. Now, finally, let's just take a look at the tick. And if we take a look here, I look for plus 1,000 readings on the upside, minus 1,000 readings on the downside. Those indicate buy or sell programs. If this was a market that was just going to continue to zoom up to all-time highs, you would much rather see bigger overall volume, better internals, right? So you want to see broad-based participation, and you want to see more buy programs setting up throughout the day. You'd want to see more plus 1,000 tick ratings. Well, if I go through, just take a look at the last couple of days. This is the 15-minute chart of the tick. We did not have a single plus 1,000 tick rating. There was no buy programs in there. Right? You didn't see broad-based buy programs impacting the entire market. You saw a couple of big tech stocks propping everything up. Now, in fairness, we didn't see any, well, we saw one sell program, right? And that was based off of a headline. So you don't see a lot of sell programs either. But again, I'm looking at, does this rally have more staying power on the upside, or are we going to see a pullback? And I'm definitely seeing more warning signals in the near term, not of a market crash, but I'm definitely seeing more signs of a potential pullback coming in the near term, which would be a welcome sight. It would help to reset everything. Right? Now, let's narrow this down. Let's go over to the 130-minute chart. Now let's take a look at some of those key tech stocks, right? Because if we're going to see a reversal, we just talked about it, big tech has to move to the downside. Well, what are the big Mag 7 stocks doing? Well, Apple did its job, or at least it tried to on Friday, right? It finished very strong rally in reaction to the earnings, definitely in a strong bullish trend here, but we did see it close off of the highs on Friday. Again, just like the overall market, I'd want to see some closes below these moving averages first. For me to get excited on the downside, I would say at a minimum, we'd need to see price below 275. That starts to happen. Now all of a sudden my interest is peaked. Now I could potentially see some follow through into other areas. Now, here's where it starts to get interesting. Look at NVIDIA. Another big part of the overall market, right? NVIDIA rolling over. Now we have a short trade setting up for Monday morning. You can see my red dots on the chart. We've got price below my moving averages. The pulse indicator down at the bottom indicating more energy being released on the downside. We have a short setting up here at 196.70. If that level hits, not only is it going to allow us to play NVIDIA, but that's also going to be a drag on the index markets. Now the tech, the ironclad tech leadership starts to show a little bit of cracking, right? So now we can start to potentially see some follow through in the near term. So NVIDIA, definitely on my radar for next week. And again, it doesn't mean I'm positioning myself for months of selling. I'm saying the next 3 to 5 days, could we see a tradable move to the downside? Absolutely. All right, let's go to Google. Google, just like Apple, right? You take a look at tech. We went from stretches where the Mag 7 stocks were all strong together to now you start to see a clear divide. Apple, Google, super strong. Nvidia, pretty weak. You take a look at Microsoft. Microsoft has lagged behind. So too has Meta. So now all of a sudden you went from having those 7 leaders on the upside. Now you're losing some of that leadership. Doesn't mean we can't head higher from here. You still have strength in Apple and Google, 2 of the biggest companies in the world, but now we're starting to see more signs of tired conditions. Google, very much like Apple, very strong. At a minimum, we would need to see price back below 370 for us to get anything going on the downside. So not really anything for us to do here on Google over the next few days. We do want to see a pullback there first. Amazon, throw Amazon in the mix. Pretty darn strong, pretty impressive going back to earnings. Is it overdone? Is it overbought? Yes. You throw it into the group with Apple, with Google. They're very, very strong. For us to get any type of bearish positioning going, I'd want to see price below 260. I'm not interested in any of these on the bullish side, putting on new bullish trades here. If you're already bullish and have positions on, that's fine. But putting new bullish capital to work now, you're chasing. I would say you'd want to hold off, wait for a pullback first so you can put on that new bullish trade from much better pricing. Let's take a look at Microsoft and Meta. Microsoft, just like Nvidia, trying to roll over, trying to give us that bear setup. But as long as Apple, Google, Amazon are strong, it's making it harder for these names to follow through on the downside. So it's on my list. We definitely have the potential there for a bearish trade, but I'd want to see a close below 405 on the downside for me to get interested on a swing trading basis. Meta, throw Meta into the camp of being weak. You throw that in the camp with Nvidia. Definitely had a negative reaction to earnings. We saw this big gap to the downside. So this one there, unfortunately with that big gap, I'm not interested here at the moment. I'd want to see a rally higher first. Try to fill part of that earnings gap before I put on a position on Meta. So I'm just in a holding pattern, but I want to point it out because, again, Mag 7 has a huge impact on the overall market. I'm trying to show that we went from having all 7 super strong to now it's very, very mixed, right? Throw Tesla into the mix. Tesla trying to break out again on the upside. If we can get above 400, could be an interesting bullish trade developing there. I would love to see a deeper pullback first. So really don't have anything popping up on the bearish side yet. I want to see a close below 380 for us to do anything there. So again, I'm now into 15 minutes of this video. This is not something that you're going to have to do 15 to 20 minutes a day. This can all be done in a few minutes. I'm talking through it in detail, but the key to remember here, the key takeaway, don't base your decisions off of what you're hearing on financial media, what you're hearing the experts saying, or what you're hearing another trader say. Everybody has an opinion, everybody has an agenda, and everybody's going to talk their book, what they're doing, what they want the market to do. Focus on price action. Focus on some key technicals. Doesn't have to be overly advanced. All we simply did was take a look at some moving averages, take a look at the structure of the candles, and now we go into a few of the key markets. And now, in just a matter of minutes, we have formed an opinion on what we could see going into next week. Now I take a look and I see some tighter conditions setting up. I'd want to lean into the bearish side early next week if we start to see a lower open on Monday. We start to see some of those key tech stocks roll over. That would be a sign for me to put on some 3 to 5 day bearish positions. Play that pullback, make some money on the downside, and then reposition on the upside if we see more bullish signs developing. So now it takes the guesswork out of the equation. I'm not trading off of what I think the market should do. I'm basing my decisions off what the numbers and the technicals are going to do. It drastically reduces your stress level. It really allows you to focus in on a methodology. So it's really what's helped me over the years. If you have any questions at all, feel free to really leave a comment on the YouTube video, or you can email me, mike@netpicks.com. More than willing to help out. We do have a link in the video description where you can download our free ebook. You can start to get more insight into how we interpret markets at NetPicks. So go ahead and click on that link, get the free resource, and we'd love to have you join us here in the days ahead with our trading group. So I'm going to wrap this video up here. Enjoy the rest of your weekend, guys, and we'll talk to you early next week.